Hey everyone, welcome back to Corporate Decoder. Today we are diving into a company that seems to be burning through cash faster than a dragon hoards gold and needing more money. So let's see how they're doing. We will be looking at Nuburu's recent filing to see what's going on. In short, Nuburu just took on a bunch of new debt to stay afloat. We're talking hundreds of thousands of dollars in loans with some pretty high interest rates and potentially dilutive stock conversions. Is this a smart move or a desperate gamble? Let's get into it. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can discuss this filing and others in detail. Alright, so this is a Form 8K filing which companies use to announce significant events to investors. In this case, it's about taking on new debt. The earliest event reported happened in May of 2025, so this is fairly recent news. Alright, now let's get to the meat of the issue, which is this section about entering into a material definitive agreement. This basically means they signed a legally binding deal that's important for the company. Here's the first agreement. Nuburu got a loan from Agile Capital Funding. They received $500,000, but they have to pay back $56,000 by November 2025. That's a pretty steep repayment schedule. They also have to secure it with cash and deposit accounts, which is not great. Next up, they have a deal with Diagonal Lending. They got $188,000 in exchange for a convertible note with a face value of $2,027,700. The interest rate is 10% and the note matures in February 2026. The really interesting part is that this note can be converted into common stock at a 25% discount. That means if the stock price goes up, Diagonal could convert their debt into stock at a cheaper price, potentially diluting existing shareholders. Finally, they have an agreement with Boot Capital. It's similar to the Diagonal deal with $94,000 in exchange for a $100 NDL convertible note, 10% interest, and the same conversion terms. It is important to know that these new debts are below the existing Series A preferred stock in terms of who gets paid first if the company fails. The conversion of the Diagonal and Boot notes into shares is also limited to under 20% of the shares until stockholder approval. If these conditions are not met, the value can decrease. This section just confirms that these securities were sold privately to accredited investors, meaning they didn't have to register the sale with the SEC. Now let's step back and look at the bigger picture. Nuburu is taking on a lot of debt and fast. The Agile loan is particularly concerning because of the high repayment amount over such a short period. The convertible notes with Diagonal and Boot could lead to dilution for existing shareholders if converted. The fact that they need to borrow money at these terms is often a bad sign. It usually means they're struggling to generate enough cash from their operations to cover their expenses. This could be due to low sales, high costs, or a combination of both. In terms of strengths, Nuburu is still getting funding, which indicates some investors believe in their potential. The technology behind high power and high brightness lasers could be valuable in the long run. However, the immediate concern is their ability to manage their debt and generate enough revenue to become self-sustaining. A major risk is that Nuburu could default on these loans if they don't improve their financial situation quickly. This could lead to bankruptcy or a fire sale of their assets. Another risk is that the stock price could drop significantly if the convertible notes are converted, diluting existing shareholders and decreasing the value of the shares that are already in the market. In conclusion, Nuburu is in a tough spot. They need to turn things around quickly to avoid serious financial trouble. The debt they've taken on could be a lifeline, but it also adds a lot of pressure. It will be crucial to watch their next financial reports to see if they can improve their revenue and manage their expenses effectively. Alright, that's our breakdown of Nuburu's latest filing. What's your take on these moves and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.